Good day, and welcome to Analysis Weekly Wraps. I am Viv Govender. This week, we're going to talk about the US Fed rate decision, US GDP numbers. Then we're going to take a look at some of the stuff that Trump is doing around the Fed and why that might be important going forward. Now, this is not going to be one of those cases where it's going to be a situation where, oh, Trump is doing something weird. Isn't that interesting? But, it's not really going to have an impact on the market. No, this is a very important kind of move that he's making right now. And the implications for markets, for the valuation of the dollar, for the way, the global economy functions is going to be quite significant. And then we're going to look at Nvidia's results and what it means for the AI sector going forward. So let's start off with the Fed expectations of rate cuts for this year. So the US Fed is likely to cut rates by at least 2 times this year, according to most analysts out there, and some of them even bring it up as high as 3 times. That is a bit of a jump up in the last little while. We've seen some, obviously weaker GDP numbers coming through in the first quarter. We've seen obviously the very weak jobs numbers, which are quite troublesome, coming through recently, and inflation really has not really reared its head too badly. So the kind of from that point of view kind of makes sense that we will look at a rate cut. I have told you in the past I thought that some of the numbers from US GDP all the way to unemployment, etc., as well as inflation, could make a serious case for a rate cut in the last meeting. But now we are looking to have a rate cut coming through in September. There's basically a 4 to 1 chance. The market's going to greater than 4 to 1 chance, over 80% chance of a rate cut in September. And I think, it's likely to go through. Now, the important thing to think about here is that what is the US Fed's main purpose? It's obviously to protect the valuation of the dollar, prevent inflation, which is another way of saying protect the valuation of the dollar. But also it has a secondary purpose about, promoting growth and economic stability, etc., etc. The problem that the Fed is facing right now is that it's coming under pressures it has not experienced before. Pressures that Donald Trump is bringing uniquely to the Fed. Now, these pressures, I think, are making the job of the US Fed very difficult because they are not able to really act, I think, in an unbiased way as much as they'd want to, because in some extent it's always going to be read into what exactly is the Trump, finger tools of the scales here. What is the independence of the Fed looking like? And this also has an impact on the Fed's, ability to do its job, because there is a certain value that we get from valuing the Fed as being independent. If the Fed is independent, it's actually stronger. Viewed as being independent, it's actually stronger than if it's not viewed as being independent, because that is something which gives people confidence that they can invest in dollar-denominated things, because there's always an incentive for politicians to manipulate the currency for short-term gains. And the independence of the Fed allows you to believe that there is a longer-term or long-term thinking actor out there that's out to protect the value of the currency against any short-term kind of political or economic gains that might come from things that might weaken the currency. Now, speaking of the Fed's decisions, we had US GDP numbers coming out. Expectations were 3. We got a 3.3 annualized rate, slightly higher than expected. Remember, the previous period we had GDP numbers that were negative. Now, you must take that with a pinch of salt, because the way we calculate GDP is according to an equation. It's consumption plus investment plus government spending, right? Minus exports. So minus imports plus exports. So it's net imports that matter here. Now, if you look at the C plus I plus G, that's consumption, investment, and government spending, what we are finding there is that, well, we are seeing, some stability around that. But when it comes to imports, we saw a bit of a tick up in imports in the last period. Why? Tariffs. It's quite simple. You expect a tariff to come into place in the next period. Say next month, you say there's going to be 100% tariff on the things that you want to buy, be it for consumption, be it for investment purposes, whatever it may be. You think next month, there's going to be 100% increase in tariff. That price is going to double. Do you want to buy it this month? Yes. And that's what people did. They bought stuff early. Okay? But remember that equation is net equals exports that matter. So if you basically look at the amount of exports, they weren't really being affected to some extent as imports were being affected. So exports stayed really stable. Imports spiked up dramatically. That translated into a net negative effect on that, which translated into a negative GDP number eventually. Now, that's obviously a temporary measure, because once the tariffs come into place, you'll have the reverse of that, because at that point in time, you're going to have much less imports, because you don't want to be basically buying stuff with the higher tariffs. You want to live off for a period of time of the stuff you bought earlier, and so imports would obviously go down, and the net effect would be basically cancelled out. So we could be seeing some of that effect coming through at the moment. The important thing to understand here is that the GDP number has gone up slightly, but not enough to basically make the Fed's dovish tone change. We are not seeing an overheating economy. We are not seeing a reason for the Fed to change its tone. And so this is almost a Goldilocks kind of situation, where we have a slightly better GDP number, but not bad enough to basically, or not good enough rather, to stop the Fed from cutting interest rates, which we want to see. So a good GDP number usually is positive for markets such as paribus. A lower interest rate is good for the market. Again, everything else equal. Put two of them together, that's an ideal situation. That's maybe one of the reasons we're seeing the stock market hit on your all-time highs. Now, let's move on to the big elephant in the room, which is Trump's manipulation, let me say, of the US Fed. So, Trump wants lower interest rates. Why? It's going to mean the economy grows faster. It's going to mean people are happier because they pay less money for things like car loans, home loans. They can buy more stuff. That is what a politician wants, because a politician thinks short term. Most politicians want low interest rates. It helps them out. Why does the Fed not want to lower interest rates? Because in the longer term, if you lower interest rates when you should not be lowering interest rates, when you're boosting up an economy that should not be boosted up, what you're going to recreate is inflation. Inflation in the longer term is going to cause problems for the economy. It's going to weaken the value of the currency. It's going to cause you to come in and raise interest rates and cause problems in the future. But in reality, does Trump care about what the world looks like more than 3 years from now? Most politicians don't. You really want to have your period looking good. If somehow the market crashes in 2030, yeah, it probably was due to some of the stuff that he did, but no one's going to blame him. But at the point in time, they look at the new president and say, hey, it's your fault. So from Trump's point of view, lower interest rates, good for him. From the Fed's point of view, they got to look at a longer term situation. The Fed is supposed to be independent, but the people in charge of the Fed are appointed by the president, effectively. The idea would be here is you get a person that you trust in charge, but then once he's in charge, he's totally independent. Kind of like the Supreme Court. The president kind of chooses who's on the Supreme Court, and he can basically put his thumb on the scales and choose, Brett Kavanaugh, as opposed to some other more liberal person, and that person basically goes on the Supreme Court. But once they're on the Supreme Court, doesn't matter what the president thought when they chose you. You get to choose whatever you want to. A famous case is Justice Roberts, the person that's heading the Supreme Court right now, was appointed by a conservative, but he has not ruled as a conservative. He's basically been very middle of the road. We've seen a number of conservatives actually do that in the past, much more than liberals. Liberals tend to be quite, set in what they're going to do. The conservatives that have been appointed to the court often rule against conservative values. So Republicans kind of have been picking more extreme conservatives for the Supreme Court recently, under the view that if you pick somebody that's more centrist but just leans conservative, they will more than you think vote liberal, and that's going to be negative for you. That's as an aside. So the Fed is supposed to be independent, even though appointed by the president. Now, the Fed independence is in part put in place because they have these terms which you cannot remove them for. The Supreme Court is for life, but the Fed has certain period of time that you're in charge of the Fed, or you're on the board of the US Fed, and you cannot be removed without cause. That means you have to do something wrong to get removed. Now, the current board of the Fed, a lot of them were appointed by Trump, but like I said, just because you appoint somebody doesn't mean they're going to always do what you want them to do. And this current board is not doing what he wants it to do. Like I said, he wants interest rates to be lower. So what does he do? Remove them. But how do you remove them? You can't remove them because they are given tenure. So what do? Try and find cause. That's what he's doing right now. He's trying to find cause to remove people. There's a woman called Lisa Cook. She happens to be a black female. She's on the Fed. She, let me say, fiddled around, maybe accidentally, maybe on purpose, with some mortgage loans. She basically said a residence was a primary residence, which affects how your mortgage is going to be basically valued, when it wasn't. That's the kind of thing. Now you may say, oh, this is a slight technical thing, but remember, this is pretty much why Trump got indicted in New York, was forced to pay pay huge fines around basically overstating the value of one of his properties or some of his properties. What he had done there was he'd gone and said, I have this much collateral. I'm a very good risk. Bank says you have a lot of collateral, you're a very good risk, therefore we will lend you at a lower interest rate. Why? Because you're low risk. If you lie materially about the risk the bank is taking in lending you money, you effectively are committing fraud. Okay? Because the bank is supposed to value your risk profile based on the information you give to it. If you lie about that information, that's fraud. That's the case that he's bringing up here. Now, has this ever been done before? No. Do many people do this? Kinda. But again, with what Trump did, I saw many arguments out there that showed that this was a common practice among real estate people. You tell the bank, hey, this is what it's going to be. The bank says, yeah, let me check it myself. If it's reasonable, I'll agree. The bank doesn't just take your word for it for these big loans that we are seeing from for Trump, etc., which is going to be many millions. But sometimes the bank doesn't do that for individuals, especially individuals who are buying primary property. That is not something that you get as often, and that is obviously a slightly different case. But again, the idea would be here is that it's not a case of you deceiving the bank. It's just that you're making a negotiating play with the bank, and the bank basically is negotiating with you. In the view of Trump, with the individual Lisa Cook, it's more likely to be this is a small technical administrative kind of thing. It's difficult to basically say for certain that she did this maliciously or whatever, even though it's a mistake that did benefit her. The more important fact here is this: Trump is likely looking for all the people that he wants to remove from the Fed. He's looking for these kind of little errors. Now, can you imagine if you had a cop car following you every day as you drove to work? How many of you guys would end up in jail? How many would you lose licenses? I would say if you wanted to, almost every person that drives, you could find multiple infractions every single week, right? Breaking the speed limit, ignoring certain rules of the road, whatever it may be, not coming to a complete stop when you go to a stop street. These are all crimes. Do we all do that? Yes. It's kind of like how you drive. Remember how you got your driver's license and you had these perfect kind of things you had to do. You can never roll back. You can never do this. How many of you guys have done that since you had a driver's license? Everyone has. So if you want to find a crime, you can. There's a famous saying from the Soviet Union: "Show me the man, I'll show you the crime." Okay, so just point who you want me to get convicted of a crime, I'll find the crime. Now Trump is doing that with the Federal Reserve. Lisa Cook's thing is obviously something that's the first, but I don't doubt that he'll try and find this for anybody. He's probably got people looking into every single one of the people he wants to remove from the Fed, and he's trying to find any kind of error, any kind of issue that they've with what they've done, and you can use that as cause. And when you have cause, you can remove the person before the tenure is over. Now, Lisa Cook is suing for this. Her claim is that this particular thing was the error, but more importantly, this has nothing to do with her job. Now, I don't think this is quite true. When you have certain positions of power, like the Fed, it's not just about, you do the calculation about what the interest rate should be based on some mathematical process, whatever. A lot of what the Fed's power is based on is on its integrity, on its basically reputation. And so I do think it's fair to say that something that diminishes the reputation or integrity of the Fed is something you can use to say, okay, you basically are not, you're being fired for cause. Okay, so that's one argument. The question does arise, however, is it going to hold up in court with regards to, is this a significant enough event lying on a mortgage form? I don't know, but it could take a while to get this sorted out. And in the meantime, it's going to give Trump more power. At least it's going to remove somebody that could have voted one way from the Fed in the period, and that's obviously going to basically, relatively give power to those that were voting the other way. Okay, so this is going to be very important for markets going forward, because I told you many times, two things consistently can be determined to affect the evaluation of markets. One is taxation, like tariffs and so on. The other one is interest rates. Interest rates are a very, very strong factor to determine what the market's going to be doing. Falling interest rates generally turn into a positive market. Rising interest rates turn into a negative market, especially for certain kinds of stocks like growth stocks. If we think that Trump is going to be able to pull this off and get rid of a bunch of people in the Fed and cut interest rates more than the Fed ordinarily would have, expect markets like stock market in the US to go up. Expect the dollar to come down because it's going to diminish the independence of the Fed, which is obviously negative. So let's move on to Nvidia's results. Nvidia's results came out. They were better than expected. The market didn't like it. Share price came down. Why? Nvidia is worth almost $4.5 trillion. It's the most valuable company in the world. It's worth more than $4 trillion. The only one that is worth more than $4 trillion at the moment. This company has had huge growth over the last several years. The first company to break a trillion was Apple. The second company was Apple, etc. The first company to break 4 trillion was Nvidia. So Nvidia has come back way behind Apple to overtake it. Jensen Huang, by any definition, is the greatest entrepreneur of the last several years. Is much greater entrepreneur than a person like, for instance, Bill Gates. Yeah, Bill Gates created Microsoft, but a lot of the growth of Microsoft happened after he left with Satya Nadella, and also there was a long period of time where Steve Ballmer was in charge, but nothing was happening in that company, and the company is now worth less than Nvidia. We have also Steve Jobs. Yeah, great entrepreneur, iPhone, etc. Big changes in how the world works. That company is still worth less than Nvidia. And again, Steve Jobs died before much of the growth in Apple occurred. Tim Cook has been guiding it for the last several years and creating much of the value for the company. Nvidia, Jensen Huang, from the start till now, creating a company that's now worth $4.5 trillion, or $4.4 trillion last time I checked. In charge for the whole growth rate, in charge for a bigger growth from start to finish, in a shorter period of time than an Nvidia or an Apple. The people that you would think of being the great entrepreneurs of our time. So Jensen Huang is up there among them, if not the head of their table. Now, a couple of things to look at Nvidia's results. Firstly, there is a fear of a slowdown in a couple of years' time as the AI basically systems come into maturity, as we basically start to hit a wall effectively in terms of just adding more compute to these AI systems. I personally don't think that is as much a problem as people do think. Why? Because AI creates its own GDP. It creates its own production. It creates its own money. Okay, number one. Number two, if AI really is going to work out, we are going to need more chips, not less chips. Why? Because it's not just about creating the thing that trains the AI, which is what it's been driving a lot of the stuff recently. But once you have the AI trained, you've got to use it, and using it requires chips as well. And Nvidia is really well placed with that sector as well. So if AI really does turn out to be the kind of game changer, boosting global GDP growth rates, say by 4 or 5% per year, above what they normally would be. Some people are saying 10% a year. That's what Satya Nadella defines as AGI, when we have 10% plus growth rates globally. When you have that, in that world, Nvidia is worth a lot more than it's worth right now. Why? Because there is not going to be a slowdown in demand. So it all comes down to what your belief is about AI. If you think it's going to be something that's really going to have an impact on global GDP, which it has to, because to make the hundreds of billions of investment worthwhile, then Nvidia's basically demand is going to be significantly higher in the future than it is right now. If, however, you think it's going to be a slowdown, you think the technology is not going to work, in terms of growing and scaling for the next 2 years, that's a different story. Me personally, ChatGPT 5 was an improvement, enough of an improvement over ChatGPT 4. Remember, ChatGPT 4 wasn't the last model. It was the model from a couple of years ago. We're not seeing the last model. It was 03 is the last model. So people are saying GPT-5 not that great compared to 03. Yeah, because it's an incremental model. It's only a few months after 03. You can't say, it's been so long from GPT-4 to GPT-5, and GPT-5 is not that much better than 03. It doesn't make sense. So the improvements are still occurring. Some of the people saying that improvements are not happening as fast as they think has more to do, I think, with the ability of people to judge how good AI is, because they're not that smart. If AI gets smarter than you, you can't really judge how smart it is. And that's, I think, one of the problems here. But one of the things I really want to say that I think is really pushing AI forward at the moment, in terms of my impression of how well it's doing, is that we are starting to see for the first time AI making progress in things like mathematics and physics, which is something that I think is really an indicator of achieving that next level of artificial intelligence. That's it for this week. Thanks for joining me. I look forward to speaking again next week. Cheers.